Have you seen the news lately? Oh my goodness. I mean, under contract properties are down, closed properties are down, listings sold are down, median prices are down. Heck, even the SVB and Signature Bank were shut down by the FDIC last week. Good gosh, how bad can it get? But wait a minute. Is it really as bad as the news would have us believe? Let's take a look at this month's update for the Denver metro area and see what the numbers are really telling us. Because, as the character Katherine Goebel Johnson said in the movie Hidden Figures, numbers don't lie. So let's take a look at the monthly 7-county Metro Denver area real estate market stats for February. These are reports from the RE Colorado and South Metro Denver Realtor Association. We're actually looking at February's numbers because remember, we always look at our numbers in arrears once all of the data is in. So of course in April, we'll be looking at March's monthly numbers. Now, pending and under contracts, there were 3,527 properties that went under contract last month. And that's down just 8.2% from what was going on this time last year. But remember, at this time last year, rates were still extremely low and hadn't really started climbing to the numbers that we're seeing today. And the pendings or under contracts for February were up 11.4% over January of this year. So even in these crazy, rapidly changing interest rate times, buyers are still out there in our Denver metro market buying homes. Yay! New listings or homes for sale. New listings or homes for sale were down 18.7% from this time last year, and that applies to both attached and detached properties. However, new listings increased by 19.6% from January of this year. Detached homes leading the way with an increase of 23%. So even though we're down year over year, the trend since January is an increase in homes available for buyers to look at. And that means buyers are having choices right now. Listings closed and homes sold. 2,675 closings happened last month, down 18.1% from this time last year. The biggest drop in sales was for attached homes, which was down about 28.1% year over year. And the 1,895 detached homes that sold was down just 13.2% from last year. Once again, closings increased 33% from January of this year. Sellers received 99.6% of list price this February versus the 102.6 price they were receiving in February of 2022. We can see the adjustment in pricing going on for sellers due to the higher interest rates that we're experiencing or some sellers who still think it's last year's market in this year's. The trend, though, is moving up. February's percentage of list price that sellers are getting is higher than the 98.8% of list price that sellers were getting on their homes in January of this year. So as you look at this trend, you have to realize if you're a buyer and you want a deal, now is the time for you to act. Average and median sale price. The average sold price last month was $646,054, an increase of 1.8% over last February for all properties. And the average sold detached home was a whopping $720,721, and that's 4.8% increase from January of this year. However, as you know, I always like to look at those median numbers because the median numbers, I think, are more reflective of what the market is doing. And the median sale price last month was $556,250, a drop of 2.8% from last February, but still an increase of 4% over January of this year. Once again, month over month, price drops have ended in February, as the median sold prices rose 4% from January and the average price rose 4.8%. So if you're a buyer and you're looking for a deal, this is the time for you to act. Median days in the market. Median days in the market for February was 26 days, and that's up 22 from the 4 days we saw last February last year. However, it's down from the 35 days it was taking in January to sell a home this year. So that means that homes priced well, showing well, and are in good locations are selling well. Weeks of inventory. Weeks of inventory or homes for sale currently stands at about a month and a half or about 6 weeks. That's 4 weeks more than the 2 weeks of inventory we had available this time last year. However, it's also 2 weeks less than what we had in January of this year. So once again, we're starting to see that trend toward a seller's market where we might be heading again into bidding wars. Some realtors are already reporting, by the way, due to this lack of inventory. Remember, we need 5 to 7 months supply of homes on the market for it to be considered a normal market. Right now, we're sitting at 6 weeks. So as we head into the spring selling market, if you're a buyer and you're thinking about buying, you might want to act quickly because you could end up in a multiple bid scenario again, depending upon what's going on with the rates when you're thinking of buying. You know, speaking of rates, you may be wondering why I keep mentioning about this being a buyer opportunity. Remember how I mentioned the collapse of the SVB and the signature banks that were shut down by the FDIC last weekend? This is actually good news for you, the buyer. And even if you're a seller, it's still good news for you because rates have dropped 0.5%. And they're actually less right now than they've been over the last few months. Now, just a quick side note, before you start thinking that this shutdown of the SVB and the signature banks is indicative of a larger bank crash like we had back in '08, these banks were niche banks. They dealt mainly in startup companies and they were overexposed. So due to the flight to safety, mortgage rates are declining. Now why? Well, because mortgage rates tend to track the yield of the 10-year U.S. Treasury bonds, which move based upon a combination of anticipation about what the Fed's actions are going to be and what the Fed actually does, and then also the investors' reactions. So when Treasury yields go up, so do mortgage rates. And when they go down, mortgage rates tend to follow. And in this case, rates went down by a good 0.5%. That's why I say now is the time to take advantage of this market. Prices aren't going down. So if you're thinking that 2023 is going to be your year to get into home ownership and start building wealth for your family, let's chat. Hi, my name is Peggy Durstoff, and I'm a realtor at Live Denver Suburbs, powered by HomeSmart. And like I mentioned, if you enjoyed this video and want more information on our South Metro Denver suburb area, please connect with me. All of my information is down below in the description box. Thank you so much for watching, and I'll look forward to seeing you next week.